Now I'd like to discuss pivot points and the important part they play when it comes time to trading. A pivot point is a numerical number where the market acts as support and resistance, where the market has a tendency to gravitate back towards that pivot point and usually bounce off of it. Meaning that if the market is on the south side of a pivot point, the market is going to come back up, gravitate towards that pivot point line, and then usually bounce off of it. If the market is above that pivot point, and here's the pivot point, then the market's going to come down, gravitate towards the pivot point, and usually bounce right back up. So it acts as a level of support and resistance. This is what it looks like. See, you have support right here at the same line as resistance. See, so when the market is above it, it acts as support. When the market is below it, it acts as resistance. These are the locations where the market seems to bounce off of it. Now, one thing you cannot do in this market is you cannot use words that are absolute, such as this always happens or this never happens. See, what happens is the majority of the time, the market will bounce off the pivot point, but there are times the market will go through it. And that's why it's important for a trader that if they are long, let's just say right here, and the market gets close to the pivot point, you may want to profit take before it hits the pivot point, and then wait for a bearish signal to show up, letting you know that this market's getting ready to bounce off of that pivot point and come back down. Now, what I have here is I have a Japanese candlestick chart. Before I draw the pivot point, I'd like you to see if you can identify the pivot point. Is this the pivot point you found? Do you see how that pivot point acts as a line of support when the market's above it and a line of resistance when the market's below it? And see, the market will bounce off of these locations, but every now and then it'll go through it. And that's why it's important to wait till the market gets close to that pivot point and gives you a signal that it's going to hold, meaning bounce off of it. Otherwise, it may go through it, and if it goes through it, then you're going to look for a bullish signal to perhaps buy this market as this came from the south to the north, and then take advantage of the market as it moves up. Now, what I'd like to do is go to smarttrader.com to show you how to identify pivot points and enabling you to take advantage of this market. Now, as we discussed before, a pivot point is a location, a numerical location where this market is going to create levels of support as well as levels of resistance at the same number. So what I want to do here is I'm going to draw a horizontal line right here, right now, to see if you can see the difference between this highs and lows right here. You can almost see that this right here is a pivot point. Right here, you can see that these markets seem to be gravitating back towards this line, pulling back, bouncing there, finally went through it, pulled back, bounced there, came close to bouncing there, and came back and bounced there. But in order to truly draw a pivot point, what you're going to need to do is you're going to need to compress the chart and try to get almost an aerial view of what's going on. So you can see that this market was in a downtrend, and then it started to consolidate. So how you really draw a pivot point is you start off with a horizontal line just like this, and then you bring it down almost to a location where you can see the market has bounced several times. Now this is not a pivot point. It's only bounced once there and once over here. So we're going to keep on bringing this down. You can see it hit this high over here, hit that high over there, and hit that over there. So we've got almost 3 bounces right there. But if we bring this down a little lower, all of a sudden we start to see that at this one location right here, it bounced there, 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 there. It bounced at several locations. So that's more of a true pivot point. Now, for the new trader, they may want to come in here and draw a little circle that would identify this and start to put their different pivot points on here so they can literally see where the market is bouncing. See, it bounced there, it bounced there, it bounced right there, it bounced right there, and let's see the other locations. Here it bounced, came close to bouncing right there, but definitely bounced there, and came in and held right there, and came very close to bouncing right here. See, so we clearly have a pivot point line right there. Now if I bring in another horizontal line, and I keep on scrolling down, okay, from this location, I'm going to go look for another pivot point. Another pivot point, and so it's almost like here I can see the market bounce there, but see it's in the middle of all these candles right in there, so I don't want to count that as a pivot point. I want to keep on scrolling down. Now here seems to be a good location where the market is bounced there, bounced right there, bounced right there, bounced there, bounced there, held right in here, went through it, came back up, and then came back, bounced there, went through it, held right there, bounced there, came back down, bounced there, and then really bounced down, going there. And so let's take this pivot point and let's move this down just a little bit lower, because that seems to be a better location of these pivot points. And so what we have here is we really have 3 pivot points on this chart. And you can clearly see that these are locations where the market seems to bounce. Now, why is this important to you? Let's just say you choose to be bearish at this moment, and so you're looking to sell. So what you want to do is you want to come down, you want to look at the chart, take a good look, and you say, okay, if this market comes in and it hits this pivot point, I'm going to look for a bearish candlestick formation, and I'm going to look to short the market. However, if it continues to go through this, then I'm going to be looking to buy this pivot point. Now, when I say buy, I'm looking for a potential bullish candlestick formation on the north side. Now, to help you understand pivot point zones are this. When the market enters a pivot point from the north coming down towards the south, it is called a bearish pivot point zone. But when it comes down and it hits this next pivot point and gives a bullish signal, then it's in a bullish pivot point zone. When it comes back down, penetrates it, then it's in a bearish pivot point zone. And as a rule, when the market enters into a pivot point zone, whether it's bullish or bearish, it usually goes to the other side. And so what a trader's doing is, like, for example, if a trader saw that the market broke this level of support, went through it, they'd be looking to take the ride down to the south side of this pivot point, then take the ride back up, then take the ride back down. And so here the market goes through the pivot point, did not give a bullish signal down here, and then has stayed bearish. Here it gave an engulfing bearish candle here, gave somewhat of an evening star right there, gave another engulfing bearish candle. So if I was thinking to go bearish here, I'd be looking for this market to gravitate back towards the pivot point, just like you see it happening right here. And obviously this was a weekend, and with this weekend, the market gapped up. Now, as it gapped up, that means that this market has broken through the pivot point, has somewhat created a hammer, which is a very bullish sign, meaning that this market's going to go up. If you were to buy this pivot point right here with this hammer, which is a bullish signal, you may want to consider taking the ride to this pivot point, getting out, then see what happens here at this pivot point. If it penetrates it, it'll probably move to the next pivot point. So let's see what happens here. The market starts to go sideways a little bit, and then it starts to come back down towards the pivot point, and right here it creates a nice morning star right here, a nice morning star, which is a bullish signal. Now, in taking that bullish signal, look at how the market goes up, penetrates the pivot point, gives somewhat of a bearish candlestick formation. But see, this bearish candlestick formation would need to be on the south side of that pivot point. And so you see how this market comes back down, and hits the pivot point, then gives a bullish candlestick formation, almost an engulfing bullish. This would be a buy signal to buy this. Now, when the market's entered into this pivot point zone right here, it usually has a free run all the way to the next pivot point. So there you'd want to buy this pivot point and take the ride, or wait for another bullish candlestick formation on the north side of this pivot point, which right here, this is a bullish shooting star. This would be a great place to be buying this market. See, what you want to do is you want to sell bearish candlestick formations on the south side of a pivot point, and you want to be looking to buy bullish candlestick formations on the north side of a pivot point. This is a bullish shooting star, a great entry for a buy because it offers small risk with great reward. And look what this market does. Goes right up to the next pivot point. There it bounces with a dark cloud cover and then penetrates it once again. And here, with this, creates another engulfing bullish candle, and this market is well on its way. So pivot points become a very important part of trading because it helps the trader identify future bounces of the market, future levels of support, future levels of resistance, and it allows the trader to know how to trade when the market starts to penetrate a pivot point. You're obviously looking for bullish and bearish signals on the opposite sides of a pivot point. Now what I'd like to do is show you how powerful Smart Trader is and how it could really help the trader identify certain levels of support and resistance, especially pivot points. So to identify a pivot point, you just go to the Smart Trader tools right here. You can see there's various Smart Trader tools, and you scroll down till you see the Smart Pivot Points. And then you click on the Smart Pivot Points, and Smart Trader finds the pivot points that normally you would have to go and figure them out all on your own, find levels of resistance and support, draw them out, but Smart Tool does all the work for you.